You were listening to chartingwealth.com for Friday the 9th of February 2018. We see markets way down today, and that's the reason we are featuring for the training today vertical crossovers for killer profits. We see vertical crossovers underway, and we want you to do this training tonight. Please follow the link that's in the email for all of our subscribers. If you're not a subscriber, you need to be one. Otherwise, you'd be getting this information. All you do is go to chartingwealth.com, put in your name, email address, and sign up for it. You will get it. The link will be there. We want you to watch this video. It will help you understand our entire theory and reason for using weekly vertical crossovers. Big difference it makes in your trading and your training. Okay, let's look at the S&P 500 down big time, 3.75%. People wanted to know, hey, is the market just sort of going to level off and go back up again? Well, it didn't today. We can say that much on Thursday. Down big, 3.75%. Let's jump right in. We see that it looks now, all this was getting a little slack as far as was it going to actually be a confirmed crossover going down? Looks like it will be. Of course, all of you who are signed up for our text messaging services in the United States, you will be getting texts on the confirmed weekly vertical crossovers at the end of the day on Friday. How do you do that? Well, the instructions are there in the daily email. You text Charting Wealth to the number 33222. It does not work if you're out of the country. All you have to do, though, is listen to the comprehensive review and forecast. We see a giant derivative oscillator, price percent oscillator, really hammering over, crossing down. Got a big red down candle, no red wick on top, with a bit of a, maybe about half the size of the candle red wick on the bottom. So again, big time changes as we go to our 2-day chart. What do we see? Well, of course, we have a confirmed 2-day crossover going down. That actually happened back on the 5th. The beautiful thing about the software that we use, TC2000, and its paid side, well, that's the paid side, and its free side, freestockcharts.com, both of those these are the screens that we operate on, the layouts that we use, the tracking software. It is amazing stuff, and we have a discount for you. If you go to chartingwealth.com and look at our daily posts, you will see the discount is there. It's also in the email to all of our members, $25 off. So it's a great deal if you want to get serious about your trading. What do we see on the latest 2-day candle? We see another strong down candle, not as big as the prior 2-day strong candle ending on Wednesday. That encompassed Tuesday and Wednesday. And of course, the one where we had the 2-day crossover going down was on the 5th. And that encompassed both Friday and Monday. So what do we see? We see continued strong down movement, derivative oscillator hammering down further, price percent oscillator kicking over even further with this strong down movement, going down precipitously. Now, as we go to, I'll try not to use that word again. I use the word pony a lot in one of the podcasts, riding that pony a lot in one of the podcasts last week, and I got a little jibe for that by you guys. That's fine. I'm happy to hear from you. Okay, what do we see on the 4-hour chart? Well, we saw where there was sort of a pullback, which typically happens. There's a bounce off the prior bottom, and then things rotated. We started to see some red candling there at the end of the day on Wednesday, and of course Thursday. Big strong down moves in the morning and then even stronger in the afternoon. What's interesting though, because of, again, the sideways slide we had with a bit of a pullback for a day and a half, what we ended up seeing is now the derivative oscillator is losing energy. We like our derivative oscillator. We don't count on it for trading advice. We use it to confirm things. We use our price percent oscillator, very similar to the MACD, but better. We use that to help us really make our trading decisions. So, seems like we're lining up for a weekly vertical crossover on the S&P 500, which will give us an entry opportunity on Monday. Be ready, my friends. Be ready. Make sure to listen to the vertical crossover training that we have that we've provided to you. Going to be important for you to have that in your head so you know what we're doing come Monday. Okay, what's going on the Qs? Down 4.22%. A huge down. We had that. It looks like we're going to have a crossover on it too on Friday. Remember, we don't call a crossover until the candle closes, and this candle, the weekly candle, doesn't close until the end of the business day on Friday. We do see a very large derivative oscillator moving over and the price percent oscillator moving over strongly also. So we will continue to watch these things, of course, blown through all the trend lines. As we go to the 2-day chart, what do we see? Well, of course, the 2-day chart has crossed over going down. That occurred again like the prior S&P 500 on the 5th with those 2 days, well, particularly the Monday down, strong down movement. And again, it wasn't like we didn't see this coming, right, my friends? We saw that the market was leveling off. We'd gone through 1 week of some down movement, another week of lots of indecision, so we knew something was up, and of course, it was this huge down move. You can see more as we get to the smaller charts, but the price percent oscillators kicked over even more down on the 2-day chart, and we just sort of, you know, you can see these things as they start developing. Now again, until we have a weekly vertical crossover, we're not going to forecast, we're going to trend follow. And that, I believe, my friends, is coming soon. We'll be moving that line also. So that is where we are on the 2-day chart. And we're going to go ahead and adjust our little candle and make sure that it is moving in the right direction, 180 degrees from up. And then lastly, we'll go to our 4-hour chart. We will check it out. What do we see? Well, we see on the 4-hour chart a sideways slide like we saw in the S&P 500, and then a dump down on Thursday in the morning, and then stronger in the afternoon. Again, the derivative oscillator, just like we said, is losing some of its downward momentum because of the sideways slide on that day and a half. Now, that's where we are, and we're expecting weekly vertical crossovers at the end of the week tomorrow on Friday at the close of business. That'll all be talked about in our comprehensive review and forecast. You need to make sure that you tune in too. What's happening with TLT? Well, my friends, that trade is continuing on beautifully, isn't it? Down 0.11% for the day. We continue to see downward movement well below our weekly trend line and our 2-day trend line, the biggest candle down yet since the weekly vertical crossover back on the 5th of January. Let's go to the 2-day chart, see what we see. Again, continuing to move down, everything moving down in the right direction. So that's what we want to see. This trade seems to be continuing. Again, it's a short trade, means it's an inverse trade. And we see that down movement in the morning on the 4-hour chart and some up movement, nice up movement, actually a filled in green box up movement, meaning strong, not as big as the red candles, but again, we're going to keep our eye on things. Looks like the price percent oscillator's gone flat. Derivative oscillator, which had been in the positives, have flipped over to the negative. So again, we'll just watch and we'll see what's going to happen to bonds. Are bonds going to bottom out, the 20-year bond, and start moving up? We want to capture all the profit that we can and pull ourselves out in case that starts to occur. Okay, folks, lastly, we're going to go to the only thing that was up for the day, and that was gold. And again, as we look at the chart, though, we see that the chart has been down for the week. We've got a red down candle with a long wick on the bottom, a small wick on the top. We have a price percent oscillator heading down. Doesn't look like, unless gold dumps in the morning, it's not going to be a weekly vertical crossover going down. It's done very well for us for 3 weeks following the up move. It actually peaked out back on the week ending the 26th of January. Very nice peaking out with a lot of good profit. Then slid sideways and down over the course of this past week. Derivative oscillator losing energy, price percent oscillator heading down on that weekly chart. As we look at the 2-day chart, we can see we've got 3 strong down candles as it continues to hammer down. We do have a weekly vertical cross, I'm sorry, a 2-day vertical crossover on gold for the candle ending the 7th of January. We need to make that adjustment to our chart. And again, it's nice to see one thing moving at least in the up direction. But again, our training teaches you how to make successful trades when the market's moving up or down. And that is, my friends, the epitome of a real trader who can actually ride the market in either direction and make money. That's what you want to practice being able to do. Because isn't that beautiful? When things are crashing, everybody's pulling their money out of the market, not knowing what to do, and you're just riding it down, making money. I will tell you, my experience has been it's easier to make money when the markets go down. Sounds counterintuitive. It's not. The more you practice, the more you learn. That's where we are on the 2-day chart. And let's take a look at that 4-hour chart and just see what we see happening on the, and again, these are Heikin Ashi candlesticks. We see gold looks like it's trying to bottom somewhere around about 124.84. We see down movement in the morning, some up movement in the afternoon. Now remember, Heikin Ashi follows the average pace of movement. Even though gold was up a little bit, 0.15%, our Heikin Ashi candlesticks help us track the true pace of it, the average pace of what's going on. So we'll continue to keep our eye on the 4-hour chart and just see what we see. So far, the 4-hour chart has been working pretty good. If it starts to rotate back over going up, we will darn sure let you know. Do keep in mind that, of course, gold has had 2 down weeks, and of course, then over the last, we've got 3, which represents 6 days, actually 5.5 days, because it's only the first day of the latest 2-day candle of down movement. It had slidden sideways there and started moving down. So we have a schizophrenia between the up moving weekly vertical crossover and the down moving 2-day vertical crossover, which means we really don't have a trade here unless you're trying to use, as we've been able to do successfully many times in the past, the 4-hour chart is a total trading chart, but it's been a little sketchy on us of late. So we're continuing to keep our eye on it just to see what we see. If it rotates back over going up, do keep in mind that you have that weekly chart. All things being equal, the market always tends to move, well, the market tends to move in the direction of the largest chart, which is the weekly. And if the 4-hour chart starts working again for us, we can trade just off that. That's where we are, folks, as we end the day. Please do watch the training that we are providing the link to on the vertical crossovers for slam dunks. Thank you so much, my friends. God bless from the whole team here at Charting Wealth World Headquarters.